If this is the first Plug Power video that you've watched of mine, you're going to want to go hide your kids and hide your wife because it's about to get nasty. What is going on, investors? Hopefully you guys are doing well out there. If you've owned Plug Power for any length of time, if you've even thought about buying this stock after you roll through these financials, the balance sheet, the statement of income, the cash flows, I'll show them all to you here on the channel. If you've gone through these on your own and thought this was a good investment, well, you're lucky you're here because I'm about to smack some sense into you. This is one of the worst stocks I've ever seen in the stock market gain any kind of traction, any kind of publicity, any kind of hype. This stock is so overhyped, it's unbelievable. And quite frankly, I've been telling it to since August of 2020. I've covered Plug Power a number of different times, and people that have been fans of this channel know, and it's almost a running joke, how much I hate this stock. And I'll show you why. Look, over the last year, everything's working out pretty great for me. The stock is down 42%. We're seeing in the after hours, after the stock was down, just 14%. I tell you what, you want to avoid beta type names when the market is going down. When the market's going up, everybody loves Plug Power. Trust me, there were times when this stock was going up and I was talking all kinds of trash on it, and people would come into my comment section and say what an idiot I am. Well, all of them will have wanted to take some profits because as that beta helps you on the way up, I tell you what, on the way down, it feels like pain. And that is what we're seeing over at Plug Power after the company reported their Q1 earnings. I would say these are largely irrelevant. I don't think this is why the stock is going down. Stocks like this are just going to get absolutely obliterated in the kind of economy, the kind of interest rate policy, the monetary policy. Everything is just not going to go this company's way. Revenue came in at $140 million. Missed expectations by just a little bit. 95% year-over-year revenue growth. Again, the amateur investor is going to come here and say, wow, look at that revenue growth. Wow, only missed by $2 million in a tough environment. Wow, this must be a really good company. Let's come look at the earnings estimates and kind of the revenue estimates. This year, they did reaffirm full year target. That might be the nicest thing that I say about Plug Power is the fact that they reaffirmed a full year target. It looks like they're going to come in right at probably about $1 billion on that revenue side. Next year, expected to grow a little bit more than that, up to about 1.4 into the 2s by 2024. The problem with this company is the estimates say that this company is not going to be profitable. It's just going to be marginally profitable into 2024. So I tell you what, if you've got an inflationary environment, if you've got a high interest rate environment, we'll come over here and we'll look at the amount of debt this company has and the amount of debt payments they have to make on that debt in order to service it. Well, I tell you what, if we're in store for a high inflation, high rate, just call it next 2 years, well, this company is going to miss these profit estimates. They're probably going to miss these earnings and revenue estimates, and companies like this are going to get absolutely obliterated. And the number one reason why we have hated this stock from day one, it's not just today. It's not just last earnings or the earnings before that. We're going on nearly 2 years of this company printing the exact same kind of numbers. And when you see these types of numbers, because a lot of you guys are going to start turning into stock pickers as the market starts to pull back, you have great instincts to say, I want to go out there and I want to find some beaten down companies. This is not going to be one of them, because you see here on net revenues of $140 million, we have total cost of revenue at $176 million. So some of you are going to say, well, you take 140 and you minus off 176. You're going to say, hey, Mr. Investor Channel dude, yes, they lost $35 million in the quarter, but they lost $12 million last year. Yeah, it got a threefold increase on those losses. Well, but this is a company that's just building up. They have Walmart and Amazon as customers. This company is just trying to scale up. Well, no. Hold your horses, guys, because we have other operating expenses. Did you see these? We have research and development. Take a look at that. That went from 9.7, that more than doubled, to 20.4. Oh yeah. Oh, we have a selling general administrative expenses too. Those went from 25. Oh, guess what, folks? Those more than tripled from 25 to $80 million. Folks, we have total operating expenses down here at $103 million. When I talk about how this company has a gross loss, these are negative margins. Guys, this is like your kids having a lemonade lemonade stand outside, and instead of collecting money like a normal person would do if they had a lemonade stand, they would sell lemonade for 50 cents or $1 outside and make a couple of bucks. No, your kids are setting up a lemonade stand and giving the customers lemonade and a handful of cash. That is what Plug Power does. No wonder Amazon is a customer. No wonder Walmart is a customer. No wonder anybody is a customer of this company, because guess what? On an $140 million worth of sales, it cost them $176 million. This is like running a lemonade stand and giving people lemonade and money, not collecting money, not making a profit, not breaking even, but no, actually giving the money away. And on top of that, we had another $103 million in cost. Last year was at 36. So our operating loss, you guessed it, goes from 48 to 139. And I tell you what, you guys got to believe this is an absolute freaking disaster. So imagine when Plug Power needs money, because we'll show you from a balance sheet perspective, a cash burn perspective, this company's going to need money. They're going to bring these financials into some kind of investment bank, and the bank is going to squeeze their neck in the upcoming interest rate environment. Look, in a low interest environment, look at what they got to pay in the most recent quarter, $8.6 million. Yeah, $8.6 million just in interest expense. It was at 12.3 last year. That is because the company continues to dilute you as a shareholder. And for maybe one positive thing I can say about Plug Power is they've used some of that money to control the debt. Otherwise, this company would be up to its eyeballs. Quite frankly, it'd probably be bankrupt by now if it wasn't for all the foolish investors that have bought shares in this company. Now, year over year on a cash basis, about the same. Total current assets down just a little bit. Total liabilities basically the same. Got a fair amount of long-term debt on this one, about $104 million. Again, they've been issuing shares and able to finance that debt. Good on the company able to do that. It's cleaned up that balance sheet to a certain degree. But let's roll all the way down here to cash flows, and you're going to see the most egregious stock-based compensation you'll ever see, and you'll see who's really getting rich over at Plug Power. We pull down this net loss. This is for 3 months ended. So we had $60 million last year. That, wow, almost tripled to $156 million. Now take a look at this stock-based compensation in the quarter at $43 million. I'll remind you, this company has $140 million. So $140 million worth of revenue. And again, this is a business model where it's like having a lemonade stand and you give out lemonade and money if somebody comes and sees you. So the executives are running probably the easiest business model in the world. No wonder Amazon and Walmart is knocking at this company's door for whatever they happen to sell. They're giving it away for free. In fact, they're basically paying them to take it off of their hands. Well, they run probably the easiest business you can possibly run. They have $140 million worth of net revenue, and the executives made $43 million. This is not for a full year. This is not for a lifetime. This is not for 6 months. This is for 3 months. $43 million worth of stock-based compensation. That is a fourfold increase from the previous year at 9.7. I thought that was nuts. Now we're all the way up to 43 million. That is why I published a video and I said pump and dump. That is all this stock is. It's a pump and dump because this is not a business. Running a business on negative gross margins that are not only, it's bad and then it's getting worse. In fact, it got 300% worse over the past year. The margins are going in the wrong direction, and we're in an inflationary environment, so you can probably add another 10 basis points to that gross loss. It's a disaster. This is an absolute pump and dump. It's only pumped up so the executives can get this stock-based compensation. They turn around and sell it, and they go buy themselves something nice, and you, the common shareholder, are left holding a bag of empty money. This is a classic pump and dump with empty bag ending up in retail's hands. Everything slowed down a little bit on the financing side. You see last year they did like a big $3.5 billion raise. This year they don't really have that on here. They really just kind of paid down some debt. I think they understand the environment that we're about to go into. It's going to be more difficult for them to raise like $3 billion on some kind of equity when the fact that this stock has just absolutely been plummeted and a lot of people have been left holding the bag on this one. Now, in terms of a technical perspective, I might have said some positive things about this one because from a trading perspective, doesn't always look like the worst stock. Now, we did make a series of lower highs that really resolved itself more recently. The fact we were not able to get above this cluster of highs back in November. We really fell short of it back in March, like a lot of stocks. I mean, this chart doesn't look unsimilar to a lot of stocks. Now we're kind of breaking through. I had this green line in. In fact, this was from the last time we kind of looked at this stock. There is, quite frankly, believe it or not, there is kind of a long-term uptrend that is still intact, or quote, longer term. Okay, this stock has been around like a really, really long time. We could stretch this chart back and go back a really long time. That's why this is a pump and dump scheme. It is left to stay alive because guess what? The investment banks collect like 10% off the top of this $3.5 billion. They collect money. Plug Power executives just continue to get rich. All they have to do is find suckers that buy into this business model, which I showed you is like a lemonade stand where you not only get lemons and lemonade, you get money and cash and everything that you possibly could want. Maybe even they fill up your gas tank these days. But in the environment that we're in now, this stock is more than likely to pull back. I would say this stock is going to be penny stock territory by the end of the year. This could potentially be the last video that I do on Plug Power. As it pulls south of $10 per share, we might do one last victory lap, but I really don't pay attention to stocks that are under about where this stock is right now. Quite frankly, it's not worth it, especially when you have broader markets like the S&P 500 that's just absolutely falling off a cliff and looks like it wants to head much, much lower, where there's going to be a whole basket of stocks that actually have positive gross margins, positive cash flows, have basically positive everything. Plug Power does not check any of those boxes. Everything's getting worse. Net income's getting worse. Cash flows are getting worse. Interest rates are getting worse. That means this company's debt servicing is going to get far more expensive. Everything about this company is a no touch. And unfortunately, if you have not followed this channel, you might not have known about it because quite frankly, there's not a lot of people saying negative things about companies. I mean, it's one thing to do it now when stocks are down, but I have been negatively bashing this stock for nearly 2 years now. If the person that you take advice from is just constantly just giving you the buy side, well, you need to balance that out. Otherwise, you are going to continue being left holding the bag of really, really bad companies like Plug Power. Hopefully you guys enjoyed today's video. We'll be back again soon with lots more. Good luck with your investments.